Welcome back my good friends to October's property update video. Now, conscious of your time and delivering as much useful information as possible without rambling, I'm going to jump straight into this one. Now, according to the Financial Times, the cost of the average home rose by 1.7% from September to August. And what's surprising is, at least for myself, is that this is the fastest monthly rise since February 2007, according to mortgage provider Halifax. And it almost makes me question whether my predictions of a slowdown in Q4, which we are literally in right this second, are actually going to happen. And as old subscribers of this channel know, I have always warned everyone to be a little bit more cautious as we approach Q4 of 2021, where I truly believe there are going to be some corrections and slowdown in the property market. Now, if we compare this year on year, house prices were up 7.4% compared to September 2020, moving the average value of homes to £267,500. And obviously this has been enhanced by the race for space, with lockdown shifting people's wants and desires in regards to their actual homes and choosing to move towards homes with gardens and more space. Now, the crazy rush of avoiding stamp duty, which I've spoken about many times, has obviously had a huge impact on the points mentioned earlier. But we can't discount that house prices also rose due to simple economics of supply and demand. There are simply not enough houses to meet the demand. And then of course, with enticing low interest rates across the board, it has had many people who had accumulated savings, maybe via furlough or the years prior to that, to take a plunge on buying a house. However, one thing we can't discount or look past as we move forward is inflation. Reports have shown inflation to be circa 3.2%, but other experts are predicting that we could see an increase as far as 10% over the next coming months and years. Now, generally, as I'm using my A-level economics knowledge here, when interest rates are high, consumer spending tends to reduce as people borrow less. Whereas when rates are low, the cost of borrowing is evidently cheaper and the rates of saving are as a result much poorer. But inflation is upon us. My shopping bill is £20 more expensive each week. My gas bill is, I don't even want to talk about my gas bill. It almost makes me want to vomit. And on top of that, we are now hearing potential tax increases being talked about by the government to recoup obviously some of their excessive printing of money they started during the pandemic. Well, actually, they've always been kind of printing copious amounts of money, but more so obviously in the last few years. And I guess it's with that I am still sticking to my guns about a property crash happening and the property market not boasting such amazing increases in prices as I mentioned earlier in this video. Now, of course, time will tell if my predictions are correct. But whilst we wait for that, let's jump into some other important updates worth noting. Now, renting is becoming more and more expensive, unless of course you're one of my tenants. But let's quickly look at the average monthly rental prices in England.
Just very quickly, guys, so if you just start in Newcastle, we have £495 per calendar month. Yorkshire and the Humber, £550 per month. Manchester's £575 a month. Stoke-on-Trent to Birmingham, £645 a month. I'm assuming Birmingham's probably a lot more than Stoke. Nottingham, £600 a month, and it's also got the Coventry area. The Eastern region, where you got Peterborough, Norwich, Cambridge, £795 a month. Oxford, £900 a month. London, £1,425 a month. And then we have the Southwest at £725 a month. Now, obviously, a lot of these have been categorized together, so obviously you're going to get some discrepancies between those. But this just shows some of the average monthly rental prices in England.
Now, personally, I can't see rents getting any lower unless the government intervenes. And if interest rates do rise, the cost to homeowners, especially landlords, will significantly rise too. And when they are often passed on these higher costs due to government changes, they tend to pass these on to their tenants too. Now, this isn't a landlord problem as such. This is actually a government problem that they pass on to the landlords, who essentially get bad in the media and by people. You see, if the costs to a landlord increase and the market dictates a higher price in the rents, they aren't necessarily doing anything bad, because if they don't increase the rents and cover their costs, they'll not only be able to not pay their mortgages properly, they'll also be repossessed too, which is something to note, as I know a lot of landlords get a bad rep. We aren't all the same. Now, my advice to investors who can't achieve their required rate of return, yield, or type of property deal is pretty simple. Sit back, relax, and be patient. I always speak about the importance of patience when it comes to investing. Obviously, don't stop putting offers in, but don't skew the numbers to make a deal fit. patience of 6 to 12 months to see how the market plays out can potentially make you better returns than rushing in now and buying at the peak of the market. Now, I know it's also frustrating seeing people selling you the dream of making tens and thousands of pounds a month, whether it's property sourcing with bad credit through their webinars and courses, but the fact is they're the only ones making money in these times off the back of you. Hence the increase of the amount of guru ads plastered across all of the YouTube videos. So, final advice, know your numbers, be consistent with your viewings and offers, and have a conservative approach on the end values or outcomes. This way, if you do get the right deal and have mitigated as many risks as possible, you have less chance of the market pulling the rug from underneath you and struggling financially later down the line. And that, my good friends, is pretty much that. And if you found any of this useful, obviously smashing the like button helps this channel out greatly. A comment down below on any other thoughts or any topics you think are useful. And I just want to take this moment now to thank you guys for sticking around when you could have been doing anything. And that makes you pretty awesome. So until next time, guys, thanks for watching.